Hey everyone, I'm Tim Wills and welcome back to the channel. A lot of traditional investors view Bitcoin as a very risky asset, and it's probably fair enough because of the fact that it is very volatile. So if you're viewing it in this traditional mindset, it is a very risky asset. It goes through periods of incredible volatility where it might go up and beat the S&P 500's annual return in a single day, and then the very next day it loses all those gains and you're back to square one. So should you include it in your investment portfolio? See, the answer is maybe. It all depends on your individual risk tolerance. You've got to accept the fact that it could dip 80% in value over the next year, and you have to be comfortable enough with that to not sell and hope that it gets back up to those all-time highs. See, it's no good buying it now at $56,000 and then selling it when it gets to 20k next year, maybe, if that happens. You have to accept the fact that it could dip and it may come back up again. It's just part of the nature of the asset. But is it risky? The typical view of risk is high volatility. So if it goes up or down in price by a large margin in a short period of time, then it's considered inherently risky by a typical sort of investor mindset and something you should probably try and avoid. But Amazon, for example, was considered a really risky asset for a long time, and to an extent probably still is because of its high volatility and price movements. But can you really consider a company that was making huge moves in multiple different industries as a risky asset? Because I don't really think you can. If you talk to someone who has truly understood the way Bitcoin works, they will say it is one of the most dependable systems ever invented, even more so than the US dollar. There are a few other factors that come into determining the risk factor of a particular stock or security, and one of those is liquidity risk. And liquidity risk refers to the inability to buy or sell shares without undue delay or without a major price movement because of a lack of supply or demand. Well, it's a good thing we have Elon Musk / Tesla, because they just expelled that fear with the liquidity test, or stunt, whatever you want to call it, at the end of April. Tesla sold 10% of their Bitcoin holdings for $272 million, making an insane profit along the way. But I don't think they really care about the profit. Well, I mean, they do a little bit. But I think the main purpose was to prove to institutional investors, big hedge funds with trillions of dollars in capital, that there is enough liquidity to support large-scale investments. But it is still incredibly volatile. There's absolutely no denying that. So the risk to investors may not come from the asset itself, but rather our own human emotions. We need to keep the volatility in perspective of the bigger picture of what Bitcoin is actually trying to achieve, and not make rash decisions. So then if the price of Bitcoin is going up and down, then what the hell drives the price of it? Because there's nothing backing it up. There's no balance sheet, there's no earnings to look on. It's just sort of going up and down at what seems like free will. For the most part, stocks, they're driven by earnings and growth potential of the company, real measurable things. Bitcoin, on the other hand, is mostly driven by momentum, speculation, and sentiment. It's why people like Warren Buffett really dislike Bitcoin, because there's nothing to look at, and he's a value investor, so he looks at the earnings and the growth potential of a company, and Bitcoin doesn't have it, so he finds it really hard to value the asset. It's really hard to estimate what types of people are buying Bitcoin at the moment, right now, because of the way Bitcoin is set up, but the best guess is that most people are buying Bitcoin for short-term gains. They're going to make a profit. They think the price is going to go up tremendously in the next year, and they're going to sell and make a lot of profit. Some people are buying it for long-term gains, maybe a decade down the track. They see the slightly bigger picture, and they're thinking that it's going to stabilize at a high level. And even fewer people than that who are buying Bitcoin right now have really bought into the mission statement behind Bitcoin. And then you compare that to Tesla, and I think you'll find a far larger proportion of Tesla investors are really buying into it because of Tesla's mission statement and the technology behind Tesla and where they think the company is going, not necessarily where they think the stock price is going, because it's probably overpriced at the moment, the stock price. They are buying into where the company is going. So I think that creates this really stark difference that drives the price of both asset classes. If you ask a Bitcoin investor why they own Bitcoin, they're going to tell you, for the most part anyway, that the price is going to go to $1 million and they're going to sell their Bitcoin and make lots of money. Now you compare that to a Tesla investor, and I think you'll find most new Tesla investors will tell you how they really believe in the technology behind Tesla, the autonomous driving and all the potential and the growth opportunities of Tesla. They're not really going to tell you about the price, although that will have an effect, obviously. They're more going to talk about the technology, and I think that is the difference in what drives the price of the two asset classes. So let's get back to the question, should you invest in Bitcoin, or rather, should you have it as part of a balanced portfolio? There are a few things to consider, and the first one doesn't actually have anything to do with risk and return. It comes down to whether you're a sustainable and conscious investor, because Bitcoin is a terrible investment if you are. If Bitcoin was a country, it would be among the 30 top energy users in the world. Now, as we transition towards sustainable energy, this will become irrelevant, but for the time being, Bitcoin does use a ton of energy, and it's probably something you should consider if you are looking to invest in it. Now, this is definitely a short-term issue. Long-term, there are lots of sustainable options that we could use. One option could be to put a satellite into low Earth orbit that mines Bitcoin using solar power, or I could even see a Tesla car mining for Bitcoin. They have such powerful computers that they could probably already do it at the moment. The possibilities are endless. This is nothing to worry about long-term, but short-term, yes, it's definitely a concern about how much energy Bitcoin uses. Then there's the question of your risk tolerance, and I don't think this should play a factor in if you have Bitcoin, but rather how much you have of it. I think a reasonable amount for a sort of conservative investor would be around that 5% level, and then you can scale up or down depending on your risk tolerance. For me, I think I've got 35% of my portfolio in cryptocurrencies. Most of that is Bitcoin and Ethereum. I know that's really high, but most of that comes from gains, so not my own money. I think I bought into it when it was at 11,000. So yeah, most of that's gains. Haven't invested 35% of my own money into Bitcoin. So that's my hot take. Have it in your portfolio, but play around with the weights depending on your risk tolerance. Now, I have been quite specific in saying Bitcoin in this video rather than saying cryptocurrencies in general, and I probably could extend that to saying Bitcoin and Ethereum because I think both of them have solid use cases. But for the most part, the rest of the altcoins are garbage. They have nothing really to them. The reason altcoins are doing so well at the moment is because of two things. So one of them is high liquidity of investors, stimulus checks, all those. They've got lots of cash and they're just putting it into investments, and cryptocurrencies seem like a good thing. And the other one is the meme culture. They sort of go hand in hand. So that's sort of one of the reasons why altcoins are going up so much in recent times. Dogecoin is not an investment. Although in saying that, you can make a lot of money off it. You're just playing. You're not really investing. Thank you so much for watching. If you like this type of content, please do consider subscribing and smashing the like button. I post finance related videos like this every week, so I'll see you back here next time.